Okay, good evening everyone. This is Joe Henches with Beyond the Chart, and this is a market update for Friday, December 6th, 2013. And December 6th, that is St. Nicholas Day, and I think some countries over there in Europe, that's a pretty big celebration. So happy St. Nicholas Day to any of our fans over there in Europe. We are getting an ice storm here in Dallas, Texas. So it is 27 degrees Fahrenheit. The rain's coming down and it is turning into ice. Everything is totally ice covered, or will be, I think, by tomorrow morning. They've canceled the schools. And I know you think we're all wimps, you northerners, but it can get pretty slick out there. So anyway, that's what we're dealing with right now, and hopefully we won't have any trees break and power go out. And anyway, let's get on to the markets. The Dow was down 68 points today. I think the fifth day in a row here. And, we're continuing. We're closing down below the 10. The 10 hasn't broken below the 20 yet. But in 5 days in a row, chances are we are going to get a little bit of a bounce. Now, when I look at this I don't have it here to show you, but sometimes during the interday, I look at the 30-minute chart and the hourly charts, and on the 30-minute chart, it looks like there's 5 waves down. And when you have 5 waves down, that means that is the direction of the impulse wave, okay? And so then you're going to get correction ABC back up. So I would not be surprised, because of just the way the market's been acting, to see the market up tomorrow, at least for the first half of the day, if not for most of the day. In part of the pullback, and to get a 50% pullback up in here or whatever, we'll just have to see what happens. I mean, we've got the unemployment report tomorrow at 7:30 Eastern time, or 7:30 Central time, so that's the big number, the jobs report, not the unemployment number. The jobs report is what they call it, but that's what everybody's looking forward to. So we'll see what happens in the morning. And you can see we've talked about this, where we're at in the wave count. I think there's a very good chance that we're up here and we are turning down. So we'll just have to see how it plays out. Let's take a look at the S&P 500. The divergences we've talked about. We're now getting the rollover very similar to the Dow. The Nasdaq's held up the strongest, although we are getting some stronger divergence here on the DI plus in the directional movement. Okay, this is the buying part of the equation up here, the blue line, and we're getting some divergence that's showing up pretty clearly. So this has been held up by Apple, I think, and I haven't looked at a lot of the other stocks, but Apple has been fairly strong, and I think Apple is right at topping out. I may take a look at that. We'll see if we get enough time here tonight. I know I've looked at it recently. The New York Composite is actually showing weaker, and the New York Composite is a broader index, okay? So, the Dow has 30, the S&P has 500, the New York Composite is much broader than that. It's clearly broken this trend line, and today, actually, the 10 is slightly below the 20. The last time that happened was October 3rd, and the time before that was August 14th, and the time before that was May 31st. So that's no guarantee. I mean, we're close to the 50-day. We could get some support coming in here at the 50-day. We're close to this previous low point here at, what is the low? 99.09 on the New York Composite. So, I mean, if you go back to let's take a look at the S&P. I don't know if it's going to get that low. The Dow could, but again, that's dropping down to 15,600, but that's where the 50 is here. So, I mean, we could get some support come in here down in this range. Now, the next thing I wanted to mention was the VIX. I wanted to talk about the VIX. So where is it? Oh, here it is. Okay, so, the 10's crossed the 20 here on November 29th, and now we're getting this spike up, just like, when it crossed before. I've got the dates marked here. Notice, though, that here on the October 9th peak, we're all the way up here. We're not even close yet. And here's a low one on August 30th, and again, we're not there. So this is telling me, unless this is extremely weak, that, we still got some more selling, that's going to go on in here. Um, that's just kind of a general feeling perception I've got that we're not there yet. We're not close. You can see the previous spikes, the previous rallies, and we're still down here. The other thing I wanted to look at was the high-low index, and the high-low index is now broken below the low of October 9th. Okay, it's the lowest since a minus 86 on minus 86 right now. The last time we had a reading like that was back on August 21st. Okay, back over here. And the interesting thing about that is, so we are as low on new high, new low as August 21st, yet August 21st was all the way down here. Or where was it? No, I'm sorry, I'm over here. August 21st is all the way down here. And we're all the way up here. And we're getting a new high, new low reading as low as that, which makes me wonder, I'm not quite sure what that means, to be honest. Because you had quite a bit of a sell-off occurring before you got a point that was low, that low on a new high, new low. Well, actually, I guess it had gone lower than that. Let me step back. So that was that was bouncing off of a previous low where it had gotten low. So let's not make too much of that. But what it looks like here is that we're kind of like, you're breaking down below all this top and this congestion. So we'll see if that continues and whether we do get down and spike down here. So sorry for confusion on that, but as I started to think about the point I was trying to make, I'm not sure that it was all that great a point. Okay, so that's really the two stocks I wanted to take a look at real quick is Yoku To-Do. The two stocks today, my biggest percentage gainer of the stocks I follow about 40 stocks, was Yoku, and it was up 5.6% today. Now, I had been calling previously, thought maybe this was a fifth wave top up in here. That clearly doesn't seem to be the case. Wave 5 must still be underway, as best as I could tell. We broke out above this resistance point that I mentioned the last time. And so now I'm thinking, okay, either we're going to 34.5 or we're going up here to 40.5. Those would be my two next targets, and I'd have to look to see the wave count. And if I wasn't in here yet, like I'm not in here, I would wait for a pullback to the 10 and see if we couldn't get some action like this, where it pulls back, closes below the 10, and then I jump in at the break of the high of that bar. That would be something I would be looking for here. Okay, the other stock is Canadian Solar. And Canadian Solar was my biggest loser today of the stocks I follow. It was down 4%. Now, it hardly shows up here, but it actually was down 4%, down 1.21 to close at 29.07. Now, again, Canadian Solar does look like 5 waves are in. This is the all-time low at $1.95 down here, okay? So I'm calling that a 0 point just to see how the waves, and clearly it looks like a clear 5 waves, okay? A zigzag here, a flat, what we call flat, an A, B, C flat correction here, which is just the opposite of this, which is exactly what you look for in the corrections. They alternate. And so then we got a wave 5 up here, and if that's the case, then we're talking about a correction on this stock that's going to correct this entire move, okay? And so that means a 38% correction is going to take it down to almost to 21. Okay, a 50% correction is going to take this down to 17.5. So that's the kind of thing I'd be looking for on this stock. So that's really it for today. Hope the ice storm doesn't get too bad tonight, and we'll talk to you guys this weekend. This has been Joe for Beyond the Chart. Thanks for stopping by. Have a great Friday.